Good morning, everyone, and thank you very much for joining. This is the morning market review. My name is Russell Shaw. I'm a senior market specialist at FXCM. Today is Monday, it's the 12th of December, and my email address rshaw@fxcm.com, and of course you can send emails through to me. I'm just trying to see if the camera is going to work here. Bear with me one moment. I think we'll have to do without the camera today. Can everybody hear me and see the screen? Just let me know if you can see the screen and if you can hear me. Okay, cool. Thanks, Shadrach. Let's just bring up the high risk investment warning, and I'll keep this on screen for a few moments. Yeah, that cam doesn't seem to be behaving itself today. I'll take a look at it after. All right, let's turn it off. Just going to bring up the market commentaries disclaimer. I'll keep this on screen for a few moments as well. And here's our references: Market Scope, TradingView, Forex Factory, and Bloomberg. Let's just go through the Forex Factory, and you can see the GDP out of the UK coming in stronger than expected. I just want to go forward to tomorrow, 3:30 p.m. ZA, which will be 1:30 p.m. UK. You've got the CPI and the core CPI coming out. That's going to be really important, especially after Friday's PPI, which came in elevated month on month. It actually was down year on year, but it was elevated month on month. But the CPI is going to be the big one. That's a day before. If we go through to Wednesday, that's the day before the FOMC rate announcement. All right, I'll just bring up our real rate. I'll keep this on screen for a few moments. Let's just go through the Bloomberg email, 5 things to know to start the day. First headline reads, UK strikes. Rishi Sunak's government is planning for military staff and civil servants to cover for striking workers at air and seaports as the UK braces for industrial action set to cause major disruptions in the coming weeks. The measures are among contingency plans due to be discussed at an emergency COBRA meeting on Monday. Second headline, China COVID. COVID is rapidly spreading through Chinese households and offices, especially in the capital, after the country's pandemic rules were unexpectedly unwound last week. It's straining the medical system and rendering official numbers that show infections at the lowest in a month, rendering them meaningless. With regards to the Fed, Federal Reserve Chair Jerome Powell has history on his side as he and colleagues split with Wall Street over how long interest rates will stay high in 2023. The central bank looks set on Wednesday to increase its benchmark rate by 50 basis points. Financial markets agree on the near-term vision, but there is a rapid retreat from peak rates later next year in a view that contrasts with Fed officials. What it's basically saying is the market, the futures, the Fed futures, actually see rates coming down quite quickly, which is different to what the communication is coming out of the Fed. All right, just a few more headlines and then we'll get on to the analysis. UK home sellers cut their asking prices at the quickest pace in 4 years after soaring interest rates made buyers more hesitant, according to property search website Rightmove. Data from the company showed the average asking price dropped by 2.1% in December, in an acceleration from the 1.1% decline in October. European stocks are tipped for declines as traders assess the outlook for rates ahead of several major central bank decisions this week. EU ambassadors resume talks on a proposed price cap for natural gas. UK officials hold an emergency meeting as the country braces for its biggest wave of industrial action since the 80s. A two-day virtual conference begins on financing the energy transition of Hungary. Data include UK industrial output and Danish inflation. Okay, so we've got that. If we could just go back to today. Here's the industrial production. Okay, so it's beating the forecast. Lower than previous, mind you, but higher than forecast. All right, so let's start off our analysis with the real rate here. Okay, so we've got the US 10-year minus the 10-year break even. That gives us the real rate. This has changed up over the last few days. Look what we've got here. We've got a higher trough followed by a higher peak. This to me is very, very interesting. I'm trying to decide what we're actually seeing here. And to be honest with you, I am sort of caught in the middle here. So we've got the FOMC coming out on Wednesday. I feel that the message that we're going to receive through the statement and through the press conference, I think that's going to be hawkish. And I think that's what we're seeing in the real rates here. However, and this is the big sort of X factor, I think that the CPI tomorrow really is important. The last CPI print that we saw showed moderation. Specifically, we're looking at the median, the sticky part of the basket, right? So we want to see what that median inflation is doing as well. The PCE also showed moderation. The reason why we're getting the higher trough here and the higher peak, number one, wage inflation spiked when we got the non-farm payroll out. And number two, that PPI showed that there is still some inflationary pressures in the services area. Energy and commodity prices have come down, but the services and food is resilient. Now, this higher trough followed by this higher peak, I think is important because it follows a chain of causality. This is the first link in the chain. We've got the dollar underneath. Now, what I would be interested to see is if the dollar is going to follow the real rate. I would expect it would. Okay, I would see trough, peak, higher trough, and I would expect a higher peak here, but it's lagging. Okay, then we've got peak, trough, and we've got, this is the DAX, mind you, and then potentially a lower trough over here. So, but you can see I've got a question mark for the higher trough in the dollar. I've got a question mark for the lower peak on the DAX. I would suggest this is the path of least resistance, given that we've got this higher trough, higher peak here. Okay, higher trough, higher peak in the real rate. So the dollar showing signs of strength, the DAX showing signs of weakness, would fall within the pattern that we're seeing on the real rate. Where it gets sort of a little bit ambiguous is, well, what happens if we look at this in terms of classical charting? And if we look at this in terms of classical charting, we get a wedge pattern. See that? A wedge pattern is a continuation pattern. In other words, it continues. So we've got the trend down. When the wedge pattern completes, we should start moving down again. I would suggest this depends very much on what happens with the inflation data. If that inflation data comes up to the upside, which I don't think it will, this will carry on going up. If we get it showing signs of moderation to the downside, then I think that we'll see the real rate moving down. hold on for me one moment. All right, sorry about that. And then let's just go and take a look. Let's just go take a look at the let's take a look at the day trading layout. I want to take a look at the DAX over here. All right, so if we take a look at the daily chart, okay, you can see that we've got this hinge to the downside. Okay, we've got this hinge to the downside. And if you take a look at it on the hourly chart is sitting in zone 3. Okay, so we're looking at the DAX now. So let's just take a look at the real rate again. Okay, so we've got the real rate pushing up. If the real rate's pushing up according to the time value of money, okay, there theoretically should be pressure on the present value, and we wouldn't be surprised to see the lower peak followed by the lower trough. Okay. Well, that wouldn't would be very much in line with a zone 3 movement on the hourly. It would also be in line with a hinge, a bearish hinge on the fast stochastic. Let's go down to the 5-minute chart. Take a look at the 5-minute chart now as we're heading towards the cash open. Okay, it's dropping from zone 1 into zone 2. All right, and what you can see here, let's just put this into perspective. You've got the hinge to the downside. You've got the zone 3. Okay, and now we've got, okay, take a look at that. Here's the reference candle reversal, right? Condition 1, condition 1, condition 2, 3. Okay, take a look at the RSI here. RSI showing us the pullback. Okay, and now we want to see if we're going to get through to the lower quintile. We get to the lower quintile and hold there. That's momentum. Okay, so the DAX does indeed look as if it's heading towards a softer opening. Hourly, zone 3, daily, bearish hinge. And then we've got the real rate that's putting pressure on the present values. Okay, let's take a look at let's take a look at the dollar. Okay, let's bring up the dollar. All right, so this is quite odd. And again, we would expect the dollar to move this side. We don't have the hinge up yet. Okay, and we've got the dollar now on the hourly showing some ambiguity. Okay, where is it? Is it in zone 1 or is it in zone 2? Is it in zone 1 or is it in zone 2? Well, the last close of the candle was actually in zone 1. Okay, so we may have a pullback here, but we don't have the hinge up here. So this little bit of ambiguity from the dollar side does give us a pause. Okay, so we can be cautious here. So instead of rushing into the risk off move into the DAX, my preference is to see confirmation from the dollar. Why would I want to see confirmation from the dollar? I want to see confirmation from the dollar because that is a safe haven. So I want to see the safe haven giving the same signal. What's the signal I'm looking potentially for? Risk off. Okay, I want to see that risk off type of signal coming through. And let's just take a look at euro just to round off the analysis. Okay, so just to add to the confusion, euro is heading in the right direction. Euro heading down, that would suggest risk off. Okay, what's the problem? US dollar Sorry, the cash market's just open, so it's a bit slower. The dollar has still got to hinge here. Still got to hinge. Okay, we go back to the euro. Okay, so the euro is pushing down. Go through to the hourly. So here's where the confusion is now. So you can see the ambiguity. We're in zone 2. We need to be in zone 3 so that there is some sort of compliance or synchronization between the hourly and the daily. So let's just put everything in perspective and then we'll round off. We've got a potential risk off environment. How come? Higher trough followed by higher peak, but it looks like we are in the midst of a continuation pattern. Equals ambiguity. We've got the CPI coming through tomorrow. That CPI going to be really the X factor, and then we've got the Fed releasing its statement, coming through with a most likely a 50 basis point hike on Wednesday, and then we've got the press conference. You can see the DAX pushing down, but we have no follow through from the dollar, and that is introducing a sense of ambiguity. We take a look at the euro. Yeah, the euro is on the daily chart showing the right direction. On the hourly, there's a lack of synchronization, no compliance. So from my sort of perspective, when I'm looking at the market today, I think there's still at least an hour or two of wait ahead of us just to see the risk on, risk off sentiment showing compliance on all instruments, and then we can make a clearer decision. Okay, given that, this is where we will end. If there's any questions, please go ahead and type those in. Any questions, please go ahead and type those in. All right, nothing coming through. So let's wind up here, and then have a good day ahead, a good evening. We shall speak tomorrow morning. Thanks very much, guys.